Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, hi, Jim. How are you doing today?
I'm doing great. Apparently, there's a lot of exuberance out there. Is it the right kind?
Well, yeah, this is remarkable going on now. As a matter of fact, this week's edition of The Economist has a cover. One of those cover illustrations with a bull, and the headline is something like "Everything's bullish." So, but we can go back. It was into October last year. The markets were sort of on the downside. There's a seasonal pull there. And then on our technical work on October the 3rd, we got what we call a springboard buy, which is an oversold in a generally flat to rising trend in the stock market. And that was on the 3rd, and the election was on the 8th. The results were on the 9th, and one of the most anti-business administration in American history was thrown out, and a pro-business administration came in. And of course, this then became very exciting. So once the election was over, then a very strong buying came in, and because it was based upon a probable reform in U.S. politics, I called it rational exuberance. And this term, for those of us who have been in the market for a while, go back to 1996, when Alan Greenspan, then chairman of the Fed, noted the rallying stock market and that the valuations were getting scary, and called it irrational exuberance. Well, he was a few years early with that one. So anyways, the action, powerful action in late November, December, we called rational exuberance. And then we got another one of those buys, the springboard buy in April. And on that one, that's where we figured that, hey, this rally can go to maybe a good momentum in June, and then with the U.S. market making a final thrust into September. So then, yeah, we got into June, and there was terrific momentum and everything else. So then I changed it to just plain exuberance because it was no longer rational. And then there was a few corrections, and indeed what we're getting now, and with this cover from The Economist, we're now into fully irrational exuberance. It is that I'm buying because I know someone after me is going to buy the market and take it higher. And that then is also known as the greater fool theory. So our target for this was September, which means sort of like around September. And we've had, again, another set of momentum figures coming in. You've had a Hindenburg signal, which has to do with the market going up and going down. But put it this way, a topping market can do a number of Hindenburgs, and some of them don't really lead to the serious decline, but you've never had a serious decline without a Hindenburg. So we've had two sets of those this year, similar to in 2007. And then more recently we had more signals similar to as in 2007. So it's interesting. Now, what has been helping the market is the crude oil, which had a pause in August because of those terrible storms. And it was likely to rally through August, and then it didn't, so it made up for it here more recently. And also the base metals, industrial commodities, were likely to rally through August and maybe into September. You had that with the base metals, and within it you had a very strong zinc price and a good copper price, and you also had a really good move to lumber, almost back to the highs of last year. So the industrial commodities did play their part and have been strong.
We'll have more with Bob Hoye right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Welcome back. We're chatting with Bob Hoye. Bob, oil has rallied, but do you expect it to last much longer?
Yeah, it rallied. We had a target of 52 to 53, and it got into the 52s, and it's rolling over. As a matter of fact, they're hitting it here. It's down into the 50 handle, and also copper and the base metals in general have been weak the last couple of days. So it makes us wonder that, hey, all of the good stuff, and this actually came out in the CNN has a fear-greed indicator based upon about 6 different financial items. And the greed side got up to 94 here this week. And all they show of that is a 3-year chart, and that's the highest in 3 years. So you've got real emotional stuff in here, and crude oil is selling off, base metals are selling off, and you're getting actually a rally in gold and silver here today. But at any rate, one of the things in the party has been the weakening U.S. dollar, and it came down to, the DX came down to 91 a few weeks ago, and with enough energy on the down that we had a downside capitulation on it and various other signals. So these can take a few weeks to get sorted out, and you're setting a bottom in the U.S. dollar. So as I said, a lot of the zest in the industrial commodities and in the stock market has been due to a weaker dollar. So the dollar is stabilizing, and it's moved up a little. As a matter of fact, it's got above the 50-day moving average, which is constructive. But getting through 94 level, then that really turns it up. So, and in previous contractions, when the dollar index has been strong. So this then makes it rather exciting because, as I've ironically noted over the decades, that for central bankers and interventionist economists, no matter what their worries are, either real or imagined, there's one remedy, and that is to provide enough currency or credit so that it depreciates the currency. And so you end up with the conclusion that the establishment really believes that the best remedy for anything is to depreciate the currency. And of course, the result in 100 years in the U.S. with the Federal Reserve System, it's lost 93, or actually no more than that, 95% of its purchasing power, which is an absurdity. But at any rate, so if the best thing that can happen is a weakening currency, then the worst thing that can happen is a strengthening currency. And I think that'll be the case this time around. It's played its part on the bull market, and it's played its part more recently in as these different items are from base metals to the stock market and also low-grade bonds, the action became very zesty, as I said, measurably zesty. And now we're watching it play out.
We'll have more with Bob Hoye right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Bob Hoye. Bob, Canadian Finance Minister Bill Marneau has just said his tax changes will not have any unintended consequences. How could you predict something like that?
Well, he has to dress it up, and if it has no unintended consequences, why are they putting it through? And they're also putting it through in the face of vigorous opposition, not just from the Conservatives, who are the official opposition, but from many people I've seen on TV, some people that are like an entrepreneur just decides that this is nonsense, gets in there and is a one-man lobby against it. But what it looks like to me is liberals having to fiddle, and they really believe him, because when Obama a few years ago came out and said, to business people, it's not you that makes the prosperity, it's the government services, which was a terrible insult. But I can see some of this in this tax idea they got. First of all, it's meddling. Second of all, they're going, as the spokesman say, they're going to make it very difficult for business, and particularly small business, which, as in the U.S., some 70% of jobs are in the small business side of the equation. So, and then also somebody pointed out the other day that on there's something to do with pensions and splitting incomes and stuff like that, that what they're forcing the private sector to do, they're enjoying privately or themselves as members of government. So it smells to high heaven, and it is a tremendous election issue on the next election, which unfortunately is still too many years away. But I think they're setting up what happened in the U.S., where government keeps getting more stupid, and the more stupid they get the more forceful with it, until people say, hey, you aren't working for us, you're working for yourselves. So it's setting up a reform movement similar to what arose in the States. I've called it a popular uprising that just happened to choose Trump. Another form of the popular uprising is the Brexit movement in England to get out of the hands of an unelected bureaucracy in Europe. And then now you have in Spain, the Catalan province is wanting to become independent. So it's a global phenomenon, popular uprising and decentralization, and certainly now the Liberals are providing a very good argument for a popular uprising in Canada. It'll be quite exciting. It would probably focus through the Conservative Party, which has a pretty attractive leader, I think, who understands the game. So while it's going to take a few years, this is building a case that the Liberals will lose the next general election.
Bob, thank you so much for chatting with us.
Yeah, Jim, good to be with you, and we look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. If you have any questions for the show or for Bob, you can send them to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of Howe Street Media Incorporated.